All right, welcome everyone, and thank you for staying till the end of the day. We are the final session of the day. I'll try to make this a little bit more interactive and keep the energy up. Thank you for being here. We've got Corn again, extra corny, the second time, the sequel. We've got Giullaume from Panoptic, and we've got Jack from Clanker wearing a Clanker shirt representing his brand there. I'm James, founder of Quant.fun, and I'm excited to cover some of these really interesting topics in DeFi, but also DeFi AI. And so I'm going to give the floor to these gentlemen for 2 minutes each to explain who they are and what they do before we get into polling the audience for some questions.
Hi, everybody. I'm Corn. I do BD for Yearn Finance. We are a collection of vaults, and people put deposits into those vaults, and we go and move them into different supply-side lending markets to earn yield, and then we return it all back to the users, and we have about $750 million in those vaults today.
All right. Hey, I'm Giullaume Lambert. James, your profile photo looks just like you. Great fun. I'm the founder of Panoptic. We're doing options on Ethereum, and we can go on all the EVMs. We're rethinking options to make them work better with the confines of DeFi. So it's not an order book. It's more like a Uniswap-like model. That means that we can innovate quite a bit on that options layer. Options have had a huge use case in TradFi. We haven't seen any product solve or get options to work on DeFi. We think we're the first one. We've launched in December. We're in a leave of absence now, but we are launching again on V2 with our V2 in December again this year.
Hey everybody, I'm Jack Dishman. I built Clanker as a side project last November. Clanker, for those aren't familiar, it's a token deployment framework, primarily on the base network. We're also on Arbitrum, Abstract, and Unichain. The goal is to be kind of what Next.js is to React, Clanker is to Uniswap, V3 and V4, allowing flexible token deployments. In the past 10 months, our tokens have done about, I think like 3.8 billion in volume and generated about $38 million for creators' interfaces in our protocol. And that's across around 455,000 tokens. It started as a chat bot on Farcaster, but now we have an API SDK and a UI deploy. Thanks.
That's in under a year. That's pretty impressive.
Yeah, it's been pretty crazy.
Yeah. All right, guys. Unfortunately, Nick Emmons could not join us. So this talk was originally about DeFi and AI. It's going to lean more DeFi. But tomorrow, I'm going to plug my own talk for Quant.fun, my startup, at 1:30 p.m. at Solana, Boston, getting more into the agentic side of things and talking more about Virtuals protocol. And so I'm kind of curious. I'm going to ask you all to raise your hands for these different questions. We're going to get an idea of where you're at, and that'll help us answer our questions, also help me learn more about our audience. So do you have any non-token DeFi positions actively? Only a few. OK, so people there. Do you actively manage your DeFi positions? If you do, actively manage. It's not just passive stuff. OK, so only a few folks. Do you have any non-trivial TVL in an agentic DeFi product or platform, like Virtuals or Morpheus? Very few people. Very few. OK, OK. And then who in the crowd has sent an on-chain transaction with an autonomous agent? Okay, still it's a very small minority. All right, and then was it on a social platform? You can keep those raised. Okay, that's good. That was Jack's question. Now you know. And then, do you believe that agentic traders will or have already become dominant in DeFi markets? Like if they will become or they have already become dominant in DeFi markets? A few of us. So most people think that it's going to be manual humans doing the trading. Okay, great. So for my gentleman here, after seeing the audience's responses, now you can tailor some of your answers. My first question is, what's something you understand about DeFi or markets that at least half the people in this room might disagree with? So at least half the people might disagree with or not know about. Try to give us a spicy hot take. It's the end of the day.
My take is that I know some people here just said that the agents would dominate. I think there's always going to be a human behind it, and they're going to set the guardrails for those agents to operate within. And I don't think there's ever going to be just like an agent that takes over everything, I guess.
No Terminator? All right. What do you guys think?
I mean, I'll take a riff on this. I think the agents, maybe they work. They work with the long tail of assets, the newly launched tokens, those that haven't seen a lot of trading. If you try to out-trade with an agent ETH or Bitcoin or there is more mature tokens, it's never going to happen. It's like trying to train an AI to play roulette better than the odds. I would say that, yeah, the reason why they have success now is because the market is so new and immature that when we do get to a point where everything is more efficient, then there will be no edge left.
Yeah, I'll kind of riff off that, right? Like I think that a AI bot probably it won't out trade the best traders out there. I like to think of AI as a tool, right, where it makes natural language processes easier into executable commands. So I think that's like the real breakthrough here, where it's now you can trade tokens in a social feed, you can email to make these transactions, really kind of like plugging it and playing anywhere. And I think that's the true unlock there.
Great, guys. And then could you share a hot take for on-chain AI and crypto that maybe at least half the people in the room don't know about or don't understand or don't agree with you?
I have a feeling that most people who are using these products today are probably taking losses.
That's true, to my understanding. I just wanted to check. Please, any other thoughts on this?
I mean, more generally, is it only AI and crypto or crypto more generally?
Just AI and crypto for this question.
Oh, okay.
Yeah.
No, yeah, the agents is one thing. I'd say that what may be surprising is that the AI can be beneficial, help you write emails to buy something. They can be adversarial too. You can imagine a purposely built AI that is attacking protocols, trying to snipe you even better than the MAV bots. There's a whole landscape of countermeasures that may need to be created because these AI agents may be working against you.
Yeah, I honestly I think that the AI chatbots are like there's like two sides of like AI chatbots in liquid markets, right? I think the first side is like in entertainment, right? You can give it a personality, you can make it a cute whatever anime person or whatever, and that attracts a different crowd, right? And then there's like the utility side, right, where it's like maybe there's you can maybe put up perpetuals or things like that. And I think there's like it's trying to separate like the signal from the noise, right? Like you can have a very cute PFP or something, but like if it doesn't do kind of like the broad variety that traders expect, or people that are interacting with these contracts, it definitely falls short. So just be cautious.
Yeah. I can't say that I disagree with you guys. I know that when I look at the agentic investing ecosystem, it seems like most of the traders are not really doing very much. I know that the leading one in virtuals, for example, is named Axelrod, and it has 5 million in TVL, but it's lost 1%. And the only reason it's lost 1% is because it's only investing 2% of its portfolio right now, and it's lost half of that. And so I think when you look behind the curtain of some of these AI projects that are investing in crypto, it's still very, very early. And I'll talk about that a bit more in my conversation tomorrow. But you guys all are up here because you're good at helping people make money either more directly or less directly. And so I want you to take a moment to share about how your protocol helps people make money and other advice you'd have for them to make money in DeFi.
So when you use some of these agents right now, when you enter a position, you might have in your wallet like one stable, and you want to zap into something that is more complicated than that. Maybe it's like a multi-token position, like a liquidity position. There are fees and costs associated with each one of those movements, and if you do it through an agent these days, like you might not know exactly what it's doing, and you might deposit the funds and like voila, you've lost 3% already on something that's only going to return 2%, and that's a loss. There needs to be more guardrails for those agents to operate within, and each one of these like sets of guardrails takes time to integrate, and it takes it is more than just like an agent like crawling something and like figuring out that this is a path it could take. They need to be programmable, and I think that is something that Yearn has been working on for 2 years now, because what happens in a Yearn vault when we have a position that's like, say someone puts like USDS into a vault, it's a stable coin. we will funnel that to different lending markets to get the best yield. And every 60 minutes, it automatically rebalances if there's a 2.5% movement in any of those markets. It will do all of those calculations off-chain because there's no point in doing it on-chain. And we'll report all of that information and why it did that reallocation. But everything happens, all the guardrails are on-chain, and we define those before any agent can make any movements. So I think this evolution is going to take some time still, like maybe years, but the natural way of people being able to direct or like describe what they want to have done, like that's the magic of AI, and that's how we onboard more people, and then hopefully by the time they get here, everything is really safe.
One thing is, when you talk about AI agents, you can imagine, okay, I'm going to find a trade, I'm going to talk to the AI, it's going to give me the best ticker to buy, the best coin, and you do this, but then your neighbor is doing this. Everyone in the room is doing the exact same thing. I mean, the AIs are pretty deterministic. You ask ChatGPT 5 questions, gives you the same answers 5 times. So I would even say I would do the exact opposite of whatever AI agent tells me, because I'll be the contrarian, I'll be able to kind of benefit on that. And if you do this, then half the people will do one side, the other half. So it's quite hard to trade all as a group without having the other side be a menace. And similarly, if you do the other side, someone will find the same thing. It's going to be crowded. So I'd say that the world I'm from, which is options trading, which is 2 sides for every bet. Some people call it zero sum, but it's a easier way to take the other side. If you can only buy a token, and you cannot short it, you cannot have a benefit when it goes down, then it can only go up until it collapses and doesn't go up. So I would say that my contrarian nature tells me to do the exact opposite of these AI agents. If you want to do this, maybe there's a perp. Again, options is the natural way to do this, but you have to take the other side. It's never going to be a golden tip for everyone. There's always going to be some downside there.
If you guys can't tell, he's kind of bearish on AI intelligence trading. I actually agree with you. I'll share that in the virtuals ecosystem, which I'm most familiar with, there is actually a large-scale problem of the signal agents along with the fund manager agents actually just copying one another and kind of moving around in this herd mentality, because it's actually kind of cheaper to just follow through with the computation that's already been done and the work that's already been done with one of the major ones. It seems like there are smaller ones that are just copying the major ones, or the signal trade agents are actually copying one another and like running LLMs to figure out if what they're copying is actually good. And so this is definitely a real problem out there in the real world in the dark forest. So
I mean, fund managers do this all the time. They get called their buddies. What do you do today? So it's humans behind the wheel in TradFi, but now it could be agents. But yeah, anything that you do can be copied and replicated.
Does everyone know what he meant by dark forest in here? Maybe you should describe that.
Ethereum is a dark forest, is a classic article that talks about how on-chain actions work. Perhaps it's difficult to understand everything that's going on. If you make transactions that aren't very well protected, you're going to get in trouble. All of your money will be stolen if you don't have the right security. That's the kind of idea you're referring to?
Yeah, this dark forest, when you send like transactions like through the Ethereum ecosystem, there are actors who will take action against it or for it or do something to it. It will be impacted.
I don't want to hijack. We had a security incident where we had to white hack our own contracts to rescue the funds. And if you were to do this on MetaMask or Rabi and, hey, let me send a transaction that rescues everything, all the bots would deploy contracts, replicate what you do, steal the funds, put them in their account instead of yours, because it's all public. It's a public mempool. So we had to get a private mempool. Flashbots does this, but it was prevalent because there was no solution maybe 3 to 5 years ago. Now you have these private mempools, but it's same thing with when you trade. If you can see who's trading, you can see, even if it's a block afterwards, you can easily copy it. Nothing is private in these environments too.
Any thoughts, Jack?
What was the original question? It was how does our projects make money for people? Yeah, so I think these liquid markets are really attention markets at the end of the day. You buy a token, what's hot today. If it's not hot tomorrow, the price is going to go down. What Clanker does is it makes it free to deploy a token that's, these contracts are audited. trusted, and I think we're a launchpad basically. The role of a launchpad is kind of shifted. It's more than just deploying a token these days. It's gathering attention for these people, right? We do it by sharing, just like with socially. And the way that, we've kind of broken this down into a few different layers, right? Where there's Clanker contracts, and what we are is kind of an infrastructure provider. There's a robust ecosystem around us with also a lot of we're calling them ABs, automated buyers, versus NABs, non-automated buyers. Those are like people like us. But yeah, basically we split LP fees with these creators that they don't have to have a technical background. Primarily, we saw these. It was started with meme coins. Now I think AI coins were a big thing, AI to AI, and now the big kind of meta is we're seeing app coins on Farcaster. People build mini apps. They want to use a token for it, and they're able to generate pretty substantial revenue for being a bootstrapped project. They're able to allocate a certain percentage if they did want to raise VC funds later. This is all possible for free now, and it's really cool to just see these people that they're artists, they're streamers, they're vibe coders, but we take care of the contracts for them in exchange for a fee on top of that. It's all volume based, right? So we split up the LP percentage. But yeah, I think it's and then another layer. This is the interface level. So interfaces like Banker on X. That's one of our biggest ones. Is they deploy Clanker contracts on behalf of X users, and basically just we abstracted the technical complexities down to zero. But yeah.
Maybe to tie it back, so we are launching on Base, and we see signature of Clanker launches because you do it on Uniswap, and also we index all of the Uniswap events in our own subgraph, and we have to stop you guys because there's so many tokens launched that it would slow down our subgraph. Oh, and some of you can probably talk about this, but some of the automated buyers kind of do a sweep and randomly try to buy everything the next block, and maybe.
Exactly. Yeah. We kind of have a different, it's totally true. They read the social context on deployment. We store their Farcaster ID or their X handle or things like that. And they will buy based on that social context. The thing is we actually like these snipers. We're training them. We're starting with a couple block delay in between swaps. We're taxing them heavy with fee 4.1 up to 80% decays for the past, the next 10 seconds or so, maximizing those creators or the rewards for those creators, which is, So we definitely also our phrase is kind of no one wants to go to a party where the dance floor is empty. These snipers bring attention to these tokens, and they're good because there's volume, which generates fees for these creators, but they can't have downsides, right? They're getting the best prices generally.
So DeFi is complicated. When you talk to people, there are all these new projects. What you knew a year ago might not be true today. A brand new protocol might have popped up, and it's twice the size of what you were using before. And so what have you guys learned recently, in the past year or 6 months, that surprised you thought was really interesting about DeFi or DeFi AI? You can take your time if you want to think about it a bit.
Yeah, I'm more and more appreciative of the vaults and the actual Yearn pioneering the work. 4 years ago, 5 years ago, this is way ahead of time. Now everything is a vault. You have Morpho, Allora. It's all managed and created. And even Lido is launching something, but the key component is this looping that happens. You can get 5% on your yield, but if you loop, you can get maybe 10% or 15%. And then you can actually seem like free money. Oh, yeah, the stable coin pair will not move. I can triple, quadruple my yield. But it's when it goes wrong, and it's going wrong horribly because of that inherent looping. And this leveraging and deleveraging happens on these lending markets in a weird way because there's nowhere else to do it. It's actually, you can't really do, again, shifting back to options. Options allow you to do this in a way that is a little bit more contained, but anything that is looped has to be with the most liquid markets, the most available liquidity, and it's these staking yield, lending yield, that now kind of maybe crank up the risk way higher than what appears to be only 8%. I'm in.
I was surprised about the amount of risk taken on in DeFi today through LRT looping. We know that the queue for Ethereum right now is like 3 weeks or maybe more than that. What he's describing is a spike in the lending market rates. People have to go and pay back those loans or else they get liquidated. If they can't get out through the Ethereum queue, they have to swap out of it. And at some point, those pools are going to be imbalanced, and you have to take a loss to swap out. That's when things go south.
I mean, so some of these queues, it's 3 weeks for Ethereum, for instance. It could be 7 days per claim, like Ethereum. There's a few of them that means that if you have looped 7 times, you have to wait 7 times this time just to get all of your money out.
You mentioned the name of a specific protocol there under your breath. What was that? Just loud for the audience.
All the queues. Athena has one, but then a lot of these liquid LRTs, LSTs, they have this redemption mechanism that adds an extra time scale. And then whenever you see these extremely profitable yields, think about the deleveraging aspect, unwinding the spring, if you want.
I feel like I don't trust like these high like APY. You know, if it's above like whatever like the interest rate is, I'm like, how is this generating this?
You know what's really funny about that? Everybody in DeFi that I've talked to who's a capital allocator is like, retail's not here. So people who are depositing into that are institutions, right?
It's gotta be. I mean, yeah. I feel like I don't know if we're quite there yet for like the retail, right? Where it's like, I think like you guys make it very easy to deposit, but like I don't know. I just feel like my my normie friends or people like aren't going to. I don't know. I feel like staking is more advanced, right?
I mean, learning about Pendle gives me a headache, and I cannot imagine. And I think I can work my way around financial products, but this is a weird, extremely used product. People that use it, I don't know if they fully understand, but it's a complex. Again, we are trying to bring finance, which is swapping and lending is great, but then you can explore it with this looping. But anything below that is an ounce of complexity means that, again, you multiple the risk. Again, this is 2008 style crashes, but it's still systemic.
We can't have a 2008 because we're crypto. We're exempt from that, right? No?
Oh, yeah,
It can happen to us too. We can have a large institution collapse and ruin our markets for a couple years. No.
DATs. No, I'm kidding.
Okay. Well, are DATs actually meaningful for DeFi? I think that's a really fair question. It's very topical. Or are they just going to pump money into L1s that doesn't slow down?
Those are also pretty surprising that DATs are becoming very popular. To form a DAT, you have to have someone who's going to allocate a large amount of tokens, like a really significant amount of tokens to start a DAT with. So you see a Solana DAT starting. There are a lot of people out there with Solana bags willing to like dedicate that to a DAT in exchange for getting DAT shares that they can dump on the market. So that is certainly a scheme out there today.
Yeah, I don't know if it benefits DeFi per se. It's like an ETF or sucking the liquidity out of what's available. It helps the price for sure, but then that allocation is not actively doing anything. It could be staking, it could be maybe doing something, but the core users will still have to kind of be driving these DeFi protocols. Again, the L1s token does what it does, but then anything that requires activity, requires active trading, I don't see how ETFs and that help them.
Yeah, I guess like a kind of like a hot take is like I feel like where people have kind of like sacrificed a lot of like the blockchain principles, right? Like of centralization or decentralization in favor of centralization, resulting in a easier UX. I think that it might take one of those catastrophic events to maybe roll back a chain or something like that. That's kind of a interesting kind of way that I feel like we've kind of progressed.
I have a little prediction there. So what he just described, giving away decentralization and accepting centralization, what he's describing, there are a lot of vault products out there today. The way that Yearn vaults work is each time we take a harvest, each time we recognize a profit, the vault share, price per share, goes up. If it were to ever go down, and people monitor vault shares for Yearn 24/7, they would know that there was a security incident, that something took a loss. What he's describing is a new type of vault out there where the vault has 100% control over what price per share describes. So if they want to show that something has been harvested, that a profit has been shared, they literally update that through a multi-sig. They can make it show whatever they want it to show. If there's a loss on that vault, you may never know about it until there's a rush for the door, and there are a lot of vaults operating out there like that today.
Scary.
I will defend some of the vault providers. At least to my knowledge, Drift on Solana, I know this is an Ethereum project here, is very safe and people can't do that. But I will have to look into that and be very attentive to it, specifically as someone that has vaults in my own product. So that's a good thing to note.
And they're also reliant on Safe and Safe's UI also for operations, and it's not exactly very reliable lately.
Neither is their CLI.
All right, guys. Well, we're going to close out the talk today, close out the whole conversation about in ETH Boston. Are there any interesting final points you want to make, things you didn't hear this week that you wanted to share, maybe something you heard that you thought was really great that you want to share with the audience?
If there's one thing I could share or inspire people to do, it is to be curious and to use these products. Like, go and use Panoptic, go and use Hyperliquid, go and use these products, and you will learn more about them than you could ever by just reading about them.
And also along these lines, the vaults, the ETFs, investing in S&P 500, it's good, it's passive, and I'd say that you don't learn a lot about finance if you do this. It's fine. It's hard to beat the S&P 500. And don't try to do this. But then if you have a better understanding, better grasp of finance through experience, you'll be able to much better deal with maybe systemic issues, or maybe be able to enter or exit positions. That could be maybe protecting your capital, or maybe making money if there's something that happens. So anything, again, the push that we're trying to do at Panoptic is to allow anyone to trade options. Trading options maybe scary for some, it may be lucrative for some, but at the end of the day, if you want to trade options in your brokerage firm, you have to lie and say, yes, I have 25 years of experience working at a quant firm, give me level 2, and then level 2 is just, okay, naked shorts. So we definitely trust you guys to be smart about this, but then you have to try it. Try small, lose a little bit, know and learn along the way, but even the vaults is abstracting away some of this, and we've seen there's issues that can arise, and again, price. I didn't know about this shares price manipulation, but it's definitely something that
I tweet about it all the time.
Okay.
No one reads it.
I'll retweet. But yeah, the key point is that even though it's more work, if you have the time, but also the interest to know about finance, then DeFi is much easier. As I said, brokerage firms will lock you out, not even able to access any of this. We open it up. We make it available for everyone. So whether it's lending, whether it's these, what seems risky, but you can manage your risk, then yeah, go for it.
Yeah, and I just wanted to say, to any of those builders or dreamers out there that are pursuing their passions, and it feels like you're at the end of the road, or you don't see the light at the end of the tunnel, and it feels like you're just wasting time doing it, following your passion. Don't give up. Bet on yourself, because I think that's when you can really break through. And yeah, just keep on experimenting.
All right, thank you guys so much. Can you give another round of applause for our speakers? All right. Quick question, it looks like. All right, maybe just one question.
Hi guys, thanks for the talk. Might be a little off topic, but you guys mentioned Athena and Pendle, so I was just curious. Do you guys, regarding the Athena Pendle Aave loop, obviously majority of Pendle's TVL is USDE related or Athena related. Do you guys view more, or do you think there's more risk involved on Aave's side or Pendle side when it comes to this looping strategy?
I think Aave is listing collaterals that make the whole thing easier to pull off, and that might be maybe the risky part. They had the choice; they can actually list some looping element that wraps up the risk. Pendle is doing what they do. Athena is doing to some extent what they do, but that extremely, that one decision to make it possible maybe Aave is going to survive, but that they'll be the one that will take the blame if something wrong. Yeah, exactly. So you I mean, without going to details, but not quite turn on, but use some of your collateral for some of your deposit for collaterals to make more of that, and then do it.
Just remember that those are the risk curators who are allowing that to happen, like Chaos Labs and Llama Risk.
Are we good? All right, guys. Thank you so much for coming.